Welcome to another edition of the ILS Hot Sheet Investments. This is a highlight for this week. We're covering 100% leased investments, development or redevelopment opportunities, spec investments, and owner-user deals. So this is just the highlights of the ones that we think are the most interesting for this past week. Starting with this listing here in Commerce. This is a 165,000 square foot building for lease or sale. So based on that, we estimated a cap rate of 4.88%. It seems to be more of an owner-user deal, but a speculative investor could take a look at it, especially because it's in LA County with excellent freeway access. So there is the property. Newmark has the listing on it. Steve and Chris, and it's got 14 dock high positions, ground level loading, 11,000 square feet of corporate office, 300 parking stalls, surface and rooftop parking, fenced yard, heavy power, and it's got really good access here, freeway access. The next deal is in Ontario. This also is for sale or lease. Again, based on that, our estimate is a 5.75% cap rate. It's a freestanding building on 2.3 acres, large secured yard, heavy power, metal or concrete and metal construction. Let's see what that looks like. There it is. Looks like two-story office. On this building, they do have a few items that are negotiable. Existing paint booth, dynamometer with cooling system, and two 15-ton bridge cranes, as well as an electric load bank for generator testing. The next deal is also in Ontario. This is a leased investment at 4.69%, triple net lease. High identity, paved yard, ESFR, 24-foot clear, situated on 89,000 square feet. And here is that deal. Oops, no, actually, we don't have a brochure on that one. The next deal is in Brea. This is a freestanding building built in 1986, major street frontage on Lambert. Large fenced yard, 3 ground level loading doors with 1 truck well. And this is for sale only, but I thought I'd bring this to your attention because I think it's a great owner-user investor opportunity, or maybe even an investor opportunity, because based on my calculations, you just need to achieve a 77-cent triple net rate in order to get a 5% return on this deal. And this building is right there, like I said, on Lambert. Okay, very busy street, right across from Farmer Boys, I think. There's retail all around it. Freestanding building. We covered all these points already. But here is the layout. So it's got two-story office, and it has 2 entrances in the front. So ideally, a guy, maybe a tile guy, because it's tile, it looks like it's being used by a tile guy now, maybe a tile guy from Anaheim, doesn't want to pay Anaheim prices, and he gets to be on Lambert here. But he doesn't need all 25,000 square feet. He could divide this up. There's 3 ground level doors and 1 truck well. So one guy could, take the bottom or the top office space and part of the warehouse. It just seems to make sense. A lot of flexibility in this building, so I thought I'd bring that to your attention. Again, owner-user investor deal, or maybe even an investor deal, since it is fronting on Lambert. The next deal is in Corona. This is for sale or lease, again, our estimate is 4.57 cap rate based on what they're asking. And this is a freestanding building on 1.15 acres, 91 freeway frontage, so that's nice. Built in 2004, and there it is. The next deal is in Santa Ana. This is a 89% leased investment, and it is very close to the freeway close, centrally Orange County located, obviously, right in the Santa Ana, and very close to the mall. Here's what that building looks like there. The next deal is leased investment, 4% cap rate, and it's a freestanding retail office building. It's really a jewel box of an investment. So if somebody likes shiny investments, pretty buildings, it's anchored by Starbucks. And let's see, as far as the 4.0% cap rate, they mentioned that the upside here is that the vacant spaces can be leased up to increase the cap rate and cash flow. So, and also another point is that the average sale price for Starbucks is 4% cap rate nationally last year. So how much can be leased up to increase the cap rate? I couldn't find a percentage of currently leased, what's currently leased or what is vacant, but what I did find is this. It looks like there's 3 tenants in the building now. So, fill in the tenants here to improve your income, your cap rate. So you got some homework on that one. But it is a jewel box building. Somebody that likes pretty buildings, and Starbucks, everybody in the world knows Starbucks, so probably an international buyer, Chinese buyer would love that one. The next one is in Riverside. This is a cap rate of 7.5%. The price was just increased, but it's still a pretty high cap rate. It's an 8-unit multi-tenant industrial complex. Long-term tenants on approximately 1 acre of land. So there it is. Looks like a block construction, low clearance building. The next deal is in Victorville. This is a 100% leased investment, freestanding office building located in the Civic Center of Victorville. Ample underground parking. And there is what that looks like. I don't know if it's underground, maybe under roof, like right there. Okay, that's that. Lake Forest. This next deal is a single tenant office building, newly refurbished. Low triple net charges on the lease anyway. So the ILS estimate on this is 5.79%. That's what that looks like there. This next deal is in El Monte. It's a fully leased investment. 7-Eleven is the anchor, and they just signed a new 10-year lease extension. And here is that deal here. They have pumps, gas pumps in the front, and then the store in the back. There's the particulars on it. Almost a 3,000 square foot building on 22,000 square feet of land, built in 2003. 4 pumps with 8 gas hoses. And we did get some additional information or highlights from Dave Hunsaker, the listing agent. Thanks for that, Dave. He says that the co-op broker fee is 2%. The store was built for 7-Eleven in 2003 and is on a corporate lease that was just extended to 2028. There is a 12% rental increase in January of 2024. It's a triple net lease. The only obligation for the landlord is to maintain the foundation and structural soundness. The tenant maintains the roof and the gasoline equipment. The owner conducted a phase 1 in 2015 and no further investigation was recommended. Sales at this location are strong and have been growing over the last 3 years, and they can send you that info if you ask for it. It's an excellent info location with good demographics for this type of use, and 7-Eleven has an excellent credit rating, and their business model is particularly recession-proof and not subject to internet sales competition. So I thought that statement was interesting. We're talking about Amazon, obviously. Amazon gobbles up a bunch of retailers. Why not 7-Eleven, right? Well, I found this article on MSNBC, no, CNBC. And it was written in July of this year, and it's talking about $70 billion lost by the retailers that Amazon is gobbling up. Here's the bespoke Death by Amazon index. As you can see, these companies are going down. But why is 7-Eleven, which is mentioned here, 7-Eleven is probably the only store that isn't Amazonable. So I thought about it, why isn't 7-Eleven suffering from Amazon or other online retailers? I think it's the convenience, right? You and I don't go to the store to get a gallon of milk. We go to 7-Eleven. It's a lot easier. So I think we just like the convenience. So as long as that exists, which I think is forever, they will be a strong company. Moving on to the next deal, Manistee. This building, or this property, 13 acres, just had a major price reduction from $7 to approximately $6 here. And let's see here. Is that this deal? Yeah. Okay, so this is 2 parcels. They can be purchased separately, and the owner is willing to carry. So I hope this is still available, because here are the highlights. Here's the 2 lots. You could buy either one. You could buy both. But I asked the city about the zoning and what the possible uses are here. I asked them if they could be used for retail, because you have retail right here going in. These are planned, and this is, as you can see, the expansion of the on and off ramps on the freeway. So this is going to be a very busy street. And what they said was that retail is not allowed at these sites right now. The city has no plans to rezone these properties. If a developer wants to process a rezone, it may be considered, but would likely be more successful if processed concurrent with a development application. Okay, so I got that from one planner. Kind of not so positive, but maybe if you have a plan, they'll consider it. I got this other email from another planner, and they said, as far as this lot, the one that's on the corner, that is right here, next to that big retail development, says this lot has a more likely chance of getting a general plan amendment, and then they cover the costs there, to a more retail suitable zone. Okay, so as you know, rezoning, upgrading the use of a property is a great way to increase your return on land. So there you go. And then they mention it's right next to EDC zone and blah, blah, blah. The other lot, they say that is less likely to get rezoned, basically. So there you go. Buy one or two. The owner can carry, maybe spin one off, keep both, get the rezoning, and get a bump in the price. That's that deal. All right, Paris, moving on. New listing. $3.39 a square foot. This is 4 parcels. So this is a basic, divide it up and sell them individually, or have a owner, user, investor use part of it and sell part of it and basically get the land for cheap or free. The next deal in Riverside, it's a new listing, $18 per square foot, raw land. Great development site for future development, zone C1 and CP, general commercial. Let's look at that. There is that deal. The next deal is in Adelanto. This is a comp, an actual comp. They were asking $500,000. It sold for $700,000. Why? Because it is an MFC, medical marijuana cultivation, zoned property. That's an actual comp. And here's another one. This is a new listing, also in Adelanto. And as you can see, the difference in price here, $21 a square foot. Again, this is marijuana. Medical marijuana cultivation zone. There is not a gold rush, but a green rush in Adelanto. There's the lot. But I found this article, interesting reading if you have a chance. It is in the LA Weekly. And it was written, there's the councilman in Adelanto, very, very happy to be among the drug booming business in Adelanto. So the article goes on to explain how basically there's a boom here, and how prices in land have gone way, way up, pretty much saving the city of Adelanto. Yeah, I won't go into it other than to say, very interesting reading. There's a high return for a lot of these properties, and I think there's still time to get in on it. So look into it. We may do a special edition just on that one day if we have time. So that is it for this week's coverage of the ILS Hot Sheet investments. If you have any investments, new listings or ones that are already on the market that you want highlighted, please send us any additional information that we don't already have. That'll help other brokers and maybe buyers to make a more informed decision or see the value, the added value to the offering. Send that in. And as always, we always appreciate getting your new listings and updates for any type of property, industrial, investment, land, office, retail. We appreciate getting those ahead of our competition. Have a great day, and we will see you next week.